Today we are going to be comparing two of the most popular index funds in the stock market, the S&P 500 and the NASDAQ. The NASDAQ is known as the more tech-heavy index fund, although both index funds carry much more than just tech stocks. The NASDAQ is a little bit more heavily weighted on companies like Apple, Amazon, and Microsoft. For the S&P 500, the five largest holdings are going to be Microsoft, Apple, Amazon, Nvidia, and Google. As for the NASDAQ, the five largest holdings are going to be Apple, Microsoft, Amazon, Nvidia, and Broadcom. The other big difference with these two index funds are their performance. Generally, the NASDAQ has outperformed the S&P 500. If we look over the last 24 years, the S&P 500 returned about 250%. Meanwhile, the NASDAQ is up about 376%. So there is quite a big alpha when looking at the NASDAQ returns compared to the S&P 500. A big thing to look at when you're comparing index funds is going to be the fees that you are paying. So when you go to your brokerage, whether it's Robinhood or Fidelity, you can scroll down, read the details, and it'll tell you what the expense ratio is for owning that index fund. So you can buy different index funds depending on which one has the lowest expense ratio. Technically, if you're looking for the safest, most diversified fund, it's probably going to be the S&P compared to the NASDAQ because the S&P has 500 different companies and it is a little bit more spread out as far as how much weightings they put for each stock. Investing in index funds like the S&P 500 and the NASDAQ is probably one of the best ways to get started with the stock market because you don't really have to pay too much attention. You can invest with however much money you have, and it pretty much is one of the safest ways you can invest.